Good morning, good afternoon, and good evening. On behalf of the U.S. Commercial Service, we welcome all of you to the fifth and final session of our trade finance series during Export Week 2023. My name is Brian Beams. I am the Deputy Team Leader for the U.S. Commercial Services Financial Services Team and your host for today's session. The producer of this series is Anthony Sargis, based in Connecticut's office. Today, our federal partners with SBA and Ex-Im and a success story will educate you, the U.S. exporter, on financing for small business exports. Next slide. Before we get to that, little housekeeping items. Everyone is currently on listen-only mode throughout the duration of the session. This session is being recorded. If you object, please disconnect at this time. Participants can write in questions into the Q&A feature at any time throughout the presentation. We will have a Q&A session at the 5 or 10 minutes left of the presentation. Next week, we will send out the recordings and resource materials in an email of all 5 sessions to all the registrants. Lastly, the views and opinions expressed in this presentation may not reflect the official policy or position of the U.S. government. Let's turn it over to Rich Foy, Regional Director at the Export-Import Bank of the United States. Rich?
It's me. It's a pleasure to be here presenting to you guys with Joe and others on the various programs related to financing. My name is Richard Foy. I'm the Regional Director with Ex-Im Bank. We are the official export credit agency of the United States. This is my contact information. We're going to share these slides with you at the end. I always say this is the most important slide of them all because that's how you get in touch with me, and that's what you're going to want to do if you have the need or questions about any of the programs that we discussed today or during the week. Ex-Im Bank, we're a small government agency established in 1934 with the focus of growing jobs through export. That's our mission. We're operated out of 12 regional offices. I'm in the Northeast regional office based in New York, and I handle New York. My responsibilities are New York up to Maine. We're going to go through some of the programs that Ex-Im offers in a way that I hope makes sense to everybody. We have some key programs: working capital, export receivable insurance, and medium and long-term insurance. And they're designed to, as you see, fulfill the need for working capital, to fulfill orders, an extension of credit and a way to access capital and finance foreign buyers. We are small business focused, despite what you may see in the news or have heard. I mean, clearly we focus. We have supported and continue to support Boeing aircrafts and GE turbines and locomotives and all those large deals. But what's nice is those large deals enable us to offer programs to small business, and the result of that, over 80% of our total transactions are for the benefit of small business. We return money to the Treasury each year as well, so we're what we call a negative subsidy agency. We're a responsible steward of the taxpayers' money, and we like to deploy the money to make sure that you continue to export and grow jobs. We find that our financing often makes a difference when competing in the international arena. We can help level the playing field when you're against foreign competition. We look to minimize the risk associated with exporting with our credit insurance that we'll go into, and we supplement commercial finance. We don't compete with any private sector industry. We work in a cooperative relationship with them, and I'll explain that further as we go on. It's important to note also that no company or transaction is too small or big for that matter. We don't have a cap per se, and we love doing small deals that make a difference to exporters. So it's important to understand that there's a whole global market out there, but only 1% of the companies actually export. A large amount of that is fear of the unknown. And I hope during this week, you've been able to see through all the partners that we're on that you're not alone. So there should not be a fear of the unknown. There are a lot of partners here that can help you explain what you need to do, a lot of resources. So that you're definitely not alone. And then there's risk, okay? And I'm going to address risk in my presentation today and how we can help alleviate some of the financial risks associated with exporting. Our programs do cover the spectrum. So from pre-export working capital, you need working capital, you need funds to produce or procure goods for export, all the way to post-export financing. And we consider insurance, a receivable insurance, a post-export funding, maybe, or financing rather, maybe lending directly to your foreign buyer as well can help make the difference in you achieving a sale or not. I'll go into our working capital loan guarantee first. So this is a guarantee, and I want to be clear, this is a guarantee to a commercial lender that can make a loan to you as the exporter so that you can manufacture or procure goods for export. Guarantee is often misunderstood. This is not a guarantee for the benefit directly of you as the exporter. It's a guarantee to the lender so they can feel more secure making a loan into what is commonly viewed as a more risky transaction, because the goods that that support the transaction are actually being exported. So this can help you unlock cash flow to fulfill these orders, and you can often borrow more on the same collateral. And I have a slide that will illustrate that as well. So we provide a 90% guarantee of repayment for the principal and interest to the lender. These loans can be set up as transaction specific. So if you have a project or a revolving line of credit. So if you regularly export and you need to borrow money to fulfill the order, and then once you're paid, you pay it back, that's a good opportunity for a revolving line. Whereas if you have a large project that is kind of off of what you're normally doing, maybe you want to structure it as transaction specific, because it's out of the norm of your normal cash flow. There are no minimum or maximum amounts, like I said, and we can use a variety of collateral types to fulfill this need. It's an asset-based, fully collateralized loan. Does require a personal guarantee. The interest rates are determined by the lender. Those are negotiated by the lender and yourself as the exporter. We have two types of lenders we work with. One is a delegated lender, and they have basically the authority up to a certain limit to act on our behalf and approve the loan. A non-delegated lender would require a secondary underwrite from us. The fees are slightly higher for a non-delegated lender because we do have the additional work. Those fees are on your loan statement, passed on to you. But those fees are incurred by the lender directly. So the benefits, obviously you can unlock cash flow. You're protected against risk. Really, the lender's protected against the risk, and you can access more funds. I'm going to go into that in a moment. This slide got a little funky for some reason. I don't know why. But this is basically the process. You export and you want to grow your sales. You apply for a working capital loan with your bank, and a delegated authority lender would process your loan, provide you the loan, and then you simply pay it back. If you default, the lender will come to us asking for the payment, and then we'll work it out with you. And I'm going to go into in a little while how we can avoid that last step from occurring. This is a standard way that a bank will look at your collateral. Okay, we have basically two buckets here. We have export inventory and receivable. So raw material, work in progress, and finished goods. Typically, a lender will loan 20% on raw materials, nothing on work in progress because it's essentially worthless if they go to the market to liquidate it, and finished goods, they discount to 50%. Open accounts receivable, foreign open accounts receivable that are not insured, they won't typically advance money on those. And LC-backed receivable, they will typically advance 70%. So on this $2 million, I believe we have $2 million collateral, they would typically loan you $760,000. With Ex-Im Bank, though, we can unlock that because on the export inventory, we allow them to loan up to 75% and 90% on receivable. So you can clearly see a difference here, 1.6 million versus 760,000 using the same collateral. That can be really meaningful when you're looking to grow your export sales. I want to focus on, we'll switch over now and focus on this particular piece because one, without the way this is set up, a lender would typically not loan anything on your, I'll call naked accounts receivable. I'm going to show you a way that you can leverage that. Okay. And it starts with sales terms. You probably know cash in advance sales are very secure, very safe for exporters. They receive the money before they export the goods. Very, very safe. However, from a buyer standpoint, it's risky and it's limiting. So they're limited to the cash on hand that they can deploy to buy the product, and they have to trust that you're actually going to send them the product, right? So, and it's flipped on open account. The equation's just flipped. So we want to get into that middle area that works for both parties. And this is where we introduce export credit insurance. This type of insurance, it covers your accounts receivable, protecting you against non-payment for a variety of reasons. It allows you to be competitive with open account terms because, and frankly, leverage your sale, because now when you're able to sell your product to your foreign buyer on open account terms, they can buy more, they can sell more, turn it around to you after they've realized their profit. Obviously, that's risky for you, so this insurance helps secure you, because if they don't pay you, then Ex-Im Bank will pay you. It's a similar scale. This is what that other slide was supposed to look like, by the way. This is basically a simple process. When you identify your buyer, you negotiate your terms with them, you come to Ex-Im Bank and you say, all right, I want to credit insure this. And once this is credit insured, you report the shipments and pay the premium to us, and hopefully all goes well, you get paid. If you don't get paid, then you come back to us. We've insured it, so we will pay you the bank, the open receivable, and then we'll work it out with your buyer. The things that are covered are, from a commercial risk standpoint, insolvency, bankruptcy, protracted default. So this is basically slow pay or non-pay, but they're still in business, okay? Political risks, war, revolution, insurrection. These things are going on, as you know, right now. Currency transfer risks, where they can't access US dollars, and so they can't pay you, even though they may want to. And a cancellation of import-export license. These things also come up. This is a government, a government event, I'll say. Oh, it's important to understand that disputes with the buyer, they're not covered. So if they ordered pink widgets and you sent them blue, well, you're going to have to negotiate that out. There's a dispute there. You would have to negotiate that with them before coming to us. Now, if you say, all right, I'll negotiate this, take the blue ones and I'll knock 30% off, you agree to that, and then they still don't pay you, then that's a reason for a claim. Okay, so we set up our policies. These are short-term export credit policies, usually up to 180 days. We have the fees are based, or the premiums based on buckets of 1 to 60 days, 61 to 90 days, and then 91 up to 120, and then on from 120. We cover 95% on our multi-buyer policies, so you do retain 5% of the risk. As I stated, we insure both the commercial and political risks. We also set up insurance for banks directly to insure their letters of credit. And like I said, we have multi-buyer, single buyer, and select risk. I think my next slide shows that. Yeah. So a multi-buyer and a single buyer. Let's think of this like an auto policy, right? You have your house, you have 3 members of your household, and you have 3 automobiles. Typically, people would have one auto policy covering all that. That's the multi-buyer policy. Everything is built into the one policy. On a single buyer, each member of your house will have their own policy with their own vehicle, right? Now, in these cases, the portfolio coverage of the multi-buyer, we have a spread of risk. So we are able to have a global rate there. So it's the same rate applied wherever you're shipping to. Whereas a single buyer, we have that as a country rated risk. So if you're dealing with a particularly difficult, financially speaking, area in the world, the rate would be higher than a more financially secure area. Underwriting standards are important. It's generally pretty simple, up to $100,000. Usually it's a trade credit, a trade reference. From 100,000 to 500,000, that's a lot of what we see. We'll look for a credit report. A broker that you would deal with could provide that for you. And you can see as you go up with the amount, the requirements from a documentation standpoint increases. We use specialized brokers that to bring applications on behalf of exporters to us. All right, I think they're the best thing out there when you're working with someone. I could take an application for you. I can explain to you what Ex-Im Bank's insurance does for you all day. The brokers have a broader market view, so they can say Ex-Im is great here, but you've grown so much, a private sector insurance policy might be better for you at that point in time. I have no problem with that. We are what you call a gap fill organization. I want to make sure that you're able to export when you have the opportunity to, and not subject to some private carriers' requirements and their profitability standards. Our single buyer, we said this already. This is a case study. This particular exporter, they export grain, I believe. Yeah, they export grain. They have 12 active policies with us, covering buyers in Asia, Middle East, South America, Europe, and Mexico. The policies range from 50,000 to 600,000 per buyer. They also utilize private trade credit insurance, but in these particular cases, we fill these gaps where either the private company can't provide the limits or they don't like the particular area in the world. There are a variety of reasons why somebody would come to us. So this is adverse selection. They're saying, all right, we're giving you the garbage, so to speak. But again, we're not focused. Obviously, we have high underwriting standards, but we're not focused on ultimate profitability from our insurance program. Our goal is rather to make sure that you don't miss out on these sales opportunities. That's our focus. If you're able to execute on these sales opportunities, grow your jobs, then we're doing our job as a U.S. government. We also have, and this I'll wrap up, our medium-term financing, which is great for capital equipment. If you're selling some large ticket items and your buyer needs multi-year financing, this is an excellent program for them. We work with lenders that loan directly to your foreign buyer. It does require 15% equity in there. It can be financed from a different lender, but we can offer 85% coverage. Repayment is usually up to 5 years. And you get paid as the exporter as soon as the goods are exported. So you're not carrying the receivable as you would in the case of the export insurance that I discussed before. These next few slides are really mainly for you to view afterwards. I'm not going to go through. We do have a few restrictions. We can't do military or defense related products. The goods must ship from the US, and we're open in 180 countries, over 180 countries, and those are identified on our country limitation schedule, which you can find on our website. So again, the next few slides are resources for SBA, Department of Commerce, excellent resources for you to further grow your business and perhaps obtain grant funding or loans. These are other links that you can see as we go through, but I'm not going to bog down this particular presentation with these. And I'll just turn it over to Joe.
Excellent. Thanks, Rich. Appreciate it. So my name is Joe Raycraft, and I am SBA's Export Finance Manager for the New England region. And I'm just one of a network of over 20 export finance managers that are around the country. And our role is really to promote SBA's export loan programs, but also the SBA's Office of International Trades, the various services that they provide. I stole this slide from, or the data from Ex-Im Bank, but again, just talking about, Rich kind of hit on this, we really like to assist small businesses as they go global. You can see here, according to Ex-Im Bank, nearly 42% of all exporters have less than 19 employees. So while we do support, larger businesses, majority of what we do is really targeted to those smaller businesses, typically that have less than 10 employees. So today we're going to focus on, I'm going to talk a little bit about, SBA, some of the general requirements that we have, SBA's role in commercial finance, and then really focus on the Office of International Trade and what we do. But I'm not going to get too far into the weeds in terms of the particular financing programs. What I want to do is give some examples of situations where export loans are used. And we're lucky to be joined today by Bill Barron. He's the president of Williamson Corporation based in Massachusetts. And he's gonna talk later on about his overall exporting experience, his experience using an SBA export loan, and also his experience using Ex-Im Bank credit insurance. So he's really using all the resources that are available to exporters. So if we can move to the next slide, be great.
Joe, I gave you the power. Is that okay?
Excellent. That's perfect.
Thank you, sir.
Okay, so just briefly, SBA background, created in 1953 as an independent federal agency, really to assist, counsel, and protect the interests of small business concerns here in the U.S. As most of you know, the SBA took on an oversized role during the pandemic. We had the PPP, the Paycheck Protection Program. We had the EIDL, Economic Injury Disaster Loans. So a lot of businesses are familiar with SBA because of those programs. And all of our lending programs are really delivered through the banks, and we'll talk a little bit more about that later on. But again, we're not really a direct lender. We provide guarantees to the banks, and that provide them with incentive to make the loan. And Rich kind of covered that already, because Ex-Im Bank works the same way. SBA's Office of International Trade, which is the group that I'm with, we have a specific focus to really help small businesses to increase their ability to compete. Our goal is to increase the number of small business exporters, as well as just the number of the amount of exports in general. And we do this through a suite of export loan programs that are really customized for small businesses. And here is a listing of that network of export finance managers I mentioned. So, you'll be getting this slide with the package that's going to be sent out next week with the presentations. But I encourage you to reach out to your export finance manager in your region, and they can talk to you not only about the SBA's Office of International Trade's offerings, but also other resources that may be relevant to you, like Ex-Im Bank credit insurance, or maybe some of the programs of the U.S. Commercial Services. So just on basic requirements for all SBA programs, this is not just export, it's all of our programs. The first one is personal guarantees of all owners of 20% or greater. I put that one up front just so it's not a surprise. It's a firm requirement. There's no negotiation. So if you're an owner of 20%, you can count on providing a guarantee on any SBA supported loan. Again, we look at companies where kind of cash flow focused, cash flow lending. So reasonable assurance of repayment is key. Of course, we want to have each of our loans collateralized to the extent possible. We always take a first position on whatever assets are financed. The borrower must have reasonable equity. So again, skin in the game from the borrower. We don't want to be financing 100% of every transaction. Company has to be for profit and considered a small business according to our size standards. And just in general, typically companies that have employees of 500 or less are eligible for SBA financing. But there is it's really based on the company's industry and its NAICS code. So if you've got a question on whether or not you fit SBA size standard, feel free to reach out to me or export finance manager in your region. Company must be located and primarily operate in the U.S., and any proceeds of the loan must be used for the domestic company. We can't finance a piece of equipment that your office in Canada is going to install in their facility. The assets have to be in this country. Businesses have to be at least 51% U.S. owned, and also no prior losses to the U.S. government or delinquent federal debts. That includes things like student loan debt. Okay, some of the challenges of getting an SBA or a business loan in general. Banks aren't going to make a loan to your company, unless they're reasonably assured that they're going to get repaid. So most of our commercial lenders are cash flow based. They're looking at your existing cash flow and your ability to repay that debt from your ongoing cash. They typically do this through an analysis of the 5 C's: character, capacity, capital, collateral, and conditions. And you can see these are pretty self-explanatory. From a character side, you want to make sure the borrowers and the guarantors have decent credit history, trustworthy, good backgrounds. Capacity, again, points to cash flow. Does the company have the cash flow to repay the debt for what they're looking for? Capital, do they have skin in the game? Have they invested some of their own capital in the business? Collateral, lenders have to look at what's going to be the collateral on the loan. That's an important consideration. And then other conditions. Sometimes these are things like the loan purpose itself. What's the money used for? Or the maturity. Maybe they need a longer maturity than what normally would be considered for that type of a loan. The economy. What's going on in the economy? It might be things outside of a company's control. That's a consideration that a lender has. So what's SBA's role in commercial financing? As I mentioned before, we're not a direct lender, but we provide guarantees to the banks. And that guarantee typically will help incentivize banks to make small business loans for companies that they may not be able to do on their own conventionally. So these 5 things here are some of the reasons why lenders rely on the SBA guarantee. The biggest one is collateral shortfalls. A lot of businesses that are financed are what we call collateral light. They may not own their own building. They may be more of a service provider. So the lender can take a first position on all business assets, but when you compare that to the loan size, you're going to be typically underwater. So SBA is okay with that because we're a cash flow lender. We're looking at the company's ability to repay and not necessarily from the collateral. Changes of ownership and acquisitions, that's an area that can be higher risk, and lenders will typically look to use an SBA guarantee. Startups, new businesses, franchises, situations where maybe a longer maturity is needed. SBA can support those. Or situations that are outside a lender's credit policy. Maybe it's an industry the lender is prohibited from lending into, or the experience of management isn't what they would like to see. They can utilize that SBA guarantee. So this is the Office of International Trade's kind of three things that we do. The first one is really export advice. We can connect you with the various export resources that are out there. And throughout this week, we've talked a lot of them. Ex-Im Bank is certainly one, the U.S. Commercial Service, small business development centers, SCORE advisors. There's a number of resources out there for exporters. The second thing we talked about this week was grants to find international buyers. We have a STEP grant program that SBA funds. Each state has its own STEP grant program that supports grant funding to companies that have specific eligible export-related costs that can be offset with reimbursable grant funding. We've got the website here, so you can look in your state to find out more about that program. And then third is what we're going to focus on today, and that's the financing for international sales. And these are our three programs that are under SBA's Office of International Trade: Export Express, Export Working Capital Program, and our International Trade Program. I've got a couple bullets here for each of these programs. This is really the only slide that I'm going to have on the details of the program, and we're really going to get into kind of some examples of the types of financing that we typically see in finance. So Export Express, again, that's for loans up to $500,000. So it's really for, I would say, smaller companies, those that might be new to exporting and just don't have a large finance need beyond the $500,000. It can be structured as either a line of credit, as a term loan. It really can finance any legitimate business need, including the issuance of standby letters of credit, which we'll get into on another slide. The Export Working Capital Program is exactly what it says. This is very similar to what Rich outlined. Ex-Im Bank has its own Export Working Capital Program. A lot of similarities between the two. We'll get into some of the big differences, but one of those is just the loan size. SBA's maximum loan size for our export working capital is $5 million, versus Ex-Im Bank has really no maximum. So typically, if it's a company that is growing and maybe they have a financing need of 3 or 4 million, but they're growing very quickly, we may say, you would qualify for SBA, but because of your fast growth, you probably should just opt for Ex-Im Bank today because you're going to grow out of the SBA program very quickly. But again, this program is more for, I would say, experienced exporters that have higher working capital needs. And then our international trade loan is really, it's a term loan. It's term financing for longer term assets. These are for fixed assets. You can use permanent working capital. We can do business acquisitions. It can be for real estate. And again, it's for companies that have expanding export sales, and the financing will kind of support that. And we do have a good example today with our company. Williamson Corporation is a good example of how these export loans can be used to support small businesses. On that export trade loan, there is a requirement for an export business plan. And I just wanted to give quickly, these are kind of the general parameters and the information that the SBA requires. So this is really the minimum requirements of your export business plan. And if you don't have one and you need to develop one, I would suggest working with a small business development center advisor. And we've got the referral website here where you can check your local SBDC for an advisor. But you can see we're basically looking for what's the 12-month revenue projection for your export business. Talk briefly about what's the company, how the company is going to achieve those projections. Where are they exporting? What products are they exporting? How are they getting paid? Some of those basic information about their export plans, and then explain how the business will how the loan is going to help the business to continue to grow its exports, either by entering new markets or expanding in existing markets, and also cover how it's going to help improve the company's overall competitive position. Interest rates, this is always a question. I just put it up here. We have maximum interest rates for several of our programs. You can see they're all listed on the left-hand side here. Depending on the loan size, typically it's prime plus a margin, depending on the loan size. For our export working capital program, you can see there's no restrictions. So these are, all of these are negotiated directly with your lenders, but there is a maximum that a lender cannot exceed. Okay, so now we're going to get into a couple of financing situations. First is we mentioned standby letters of credit and how they can be used, and we've got two programs, Export Express and Export Working Capital, that can be used to support these. So if a business has a $1 million contract that they receive from an overseas customer, in this case it's from a customer in India, they're going to provide design and engineering services. They're able to negotiate a 30% down payment from the Indian buyer. The buyer says, that's fine, I'm fine, paying the $300,000 up front, but in return, I'd like to have some guarantee that I would get my $300,000 back if the company is unable to execute the contract. So the way that we do that would be through the issuance of a standby letter of credit. So you can go to your bank and you can ask them if they could issue that standby letter of credit for that $300,000 payment that you receive. But as collateral, they're going to ask you for the $300,000 to be put into a control account. So it's 100% cash collateralized. So now the company has no working capital benefit from that advance payment. So the solution would be working with one of our export loans. We could use a line of credit that would be utilized to issue the standby letter of credit. And our collateral requirements are only 25% of that standby letter of credit amount. So you can see in this situation, the exporter would put $75,000 into that control account, and we would issue a $300,000 standby. So that would give them a working capital benefit of the remaining $225,000. So again, just a way to, it's a great financing tool to maximize a company's working capital when it comes to advance payments. Okay, now we're going to turn to our success story in Williamson Corporation. It's my pleasure to introduce Bill Barron. He's the president of Williamson Corporation, and they're a manufacturer of temperature sensors. The company was established back in 1951, and they generate more than 50% of their sales through exports. I think they're up to 34 countries, but it may be higher. Williamson's products are used to measure temperature during high temperature manufacturing processes involved in production of steel, aluminum, glass, and even diamonds. Bill, if you wouldn't mind taking a few minutes to tell us a little bit about yourself, your company, your experience exporting, and your experience with working with SBA's export loan programs and also Ex-Im Bank's credit insurance. Please.
Okay. All right. Well, thank you, Joe. You've kind of given the introduction. I'm president of the company. I'm the owner of the business. We have been in business for many years. We've been pursuing international sales for a long time, but really in the last 5 years have gotten a lot more traction and success in selling. We manufacture all our pyrometers here in the US. We had a lot of success in the US, and based on the industries that we serve, which steel mills, automotive companies, aluminum manufacturers, petrochemical industry, these are all international corporations that we had an opportunity to go to work with. So expanding our distribution into other countries was a very good opportunity for us. And so in recent years, we established some partnerships with other companies. In the beginning, a lot of it was set up as people who would buy and resell our products. I wouldn't necessarily call them distributors in that all our products are made to order. So, but these people would buy and resell, and they would kind of manage all of the local issues in their respective countries. As we started to have more success, we look to develop our products to better align with the needs of international companies. And once we had the right partners, we started to really get some traction. So our sales have shifted from about 25% international to a little over 50%, as Joe said. And we've also found that we really wanted to work more closely with companies in these different countries. So always going through the reseller had some limitations. And one of the things that was, I'm going to jump around here a little bit, but maybe starting with the Ex-Im Bank piece, one of the things we wanted to do is we wanted to be the approved vendor on some of these large corporations, and we didn't want to have to be worrying about the payment terms. So getting involved with the credit insurance for our accounts receivable was a really nice way to give us the ability to go direct and get set up directly with our customers around the world. I have to say the program has worked out really well for us. The fees associated are very reasonable. We do have some companies that we do cash in advance with, but the majority of our sales are involved with Ex-Im Bank Insurance. And as I said, getting approved as an approved vendor directly with the customer is a good thing. Also, when we were going through buyers or resellers, we didn't always have good control on the pricing. This way we can kind of control our pricing to, say, a multinational corporation where they can buy at the same price across many different locations. And then lastly, we really haven't run into too many situations where we've had to file a claim. In fact, we've never filed a claim. We had one claim that we were threatening to file, and I can't speak to all the nuances, but there are a lot of tools in place for Ex-Im to do the collection. And if you share that with the client and let them know that what the next step is, you're going to work with the U.S. government, they seem to find a way to get you paid. And that's what happened in our case. So it's been a great success, easy program to renew every year. I think we're in our fourth, maybe fifth year. And as we've grown some of our international customers, Ex-Im Bank is looking at their credit worthiness and increasing the credit limits on what we're able to ship to each of those customers. So that's been a really good program for us. In more recent times, Williamson A is growing. Even through the pandemic, we had a little bit of a hiccup in 2020, but the recovery started in 2021 and continued to improve in 2022, where we exceeded our sales pre-pandemic. We also, because of the supply chain issues, being a manufacturer, we've had to really increase our inventory. Lead times are a lot longer, and in order to win business, our customers are being appreciative of longer lead times, but there are times you've really got to be able to deliver in a time frame that's acceptable to them. So our inventory has increased significantly in the last 2 years to support that. And then thirdly, the investments we're making in new product development to better support some of these international customers is another driver for cash flow demand in our business. So we sat down with our bank, Eastern Bank, a year and a half ago. We talked about these pressures for cash, working capital, the growth, higher inventory, and product development all happening at the same time. And we looked at trying to increase our line of credit with the collateral that we had. But Eastern actually came back with the export loan program, given our export nature. And what that allowed us to do is a couple things. Instead of just looking at a line of credit, we also got involved with getting a term loan and an increase to the line of credit. So we increased the amount of cash we were able to access. Also, instead of doing more of a typical 5-year term, we were able to get a 10-year term with the SBA backed loan, which was another benefit, so that as the cash comes in, we're not paying it back at such a quick rate. And it all happened in relative ease. Eastern Bank has a good relationship with the SBA. They work through the application process. It was not a daunting thing to fill out. The application covered a lot of the things we've just talked about here, so it was pretty easy to work with. And I'm happy to say, with those resources available, 2023 is continuing to look like a good year for Williamson, and a lot of that is continuing to be with expanded sales to customers outside the United States. So that's kind of the Williamson story. We've definitely benefited from these different programs. We did get involved with the PPP program, and a few years ago, Joe was pointing out we had a succession event. It's a family-owned business, and we were going from one generation to the next. And again, some SBA financing was involved in that transaction as well. So Williamson has a long history of using these programs, and it's certainly helped us get to where we are today.
Yeah, and I'm happy that you were able to share this, because this is a really interesting story, in my opinion. As you said, Eastern Bank, your lender, they reached out to me pretty early in the process because they really wanted to do something. They saw, like, you had a situation where your existing business was growing, and you had these long lead times on all those electronic components we hear about, and you really needed to ramp up inventory for that. But at the same time, you had a new product you were launching, so you had inventory requirements for that. And the lender really wanted to support you, but they felt like, yeah, using your line of credit wasn't going to be the answer. So to provide you with more of a permanent working capital term loan, and again, they could have done it conventionally for 5 years, but they felt that would put a little bit of pressure on the repayment ability. So they said, look, what if we did this with an SBA export loan and gave them 10 years? Is that something the SBA would do? And we said, absolutely. This is exactly why you would come to us, because it just provided that kind of cash flow relief to some degree to spread the payments out over 10 years versus 5 years. And in this type of loan, I would say for permanent working capital is a little bit unconventional, because you're financing a short-term asset with long-term financing. But you know what? Since the pandemic, since we've got supply chain issues, things change. So this is actually a very relevant type of financing that we see quite a bit today. So I thought it was a really good example, and certainly from the lender's perspective, they provide the company with a line of credit, and to give some additional kind of liquidity, they agreed to increase their advance rates on some of the inventory, which
I was going to mention that. Yeah.
Which I thought
was
really
earlier. That was Williamson. It definitely made a difference having the Ex-Im insurance that kicked in a couple of years ago, and at this point we realized there was even a higher level of collateral that could be advanced because of that AR insurance.
Yeah. So I think the moral of the story here is, be clear with your lender on what your financing needs are. And for the lenders that might be on the line, reach out to your export finance manager just to talk through situations like this to understand, well, what's possible. Bill, one question I have, I think you've utilized it, but can you talk about any experience you've had working with the STEP grant program? I think you've used it in the past.
I wasn't as
maybe-
prepared to talk about that.
That's
It was
not- that's-
quite some time ago. So we did use a STEP grant program. This was something to help pay for some development work by some outside consultants. One of the things we needed to do to grow the business internationally was to enhance some of our quality standards and certifications. Working with U.S. companies, we weren't many years ago weren't ISO 9000 certified. We weren't ISO 17025, which is a calibration laboratory. So we were able to get some funding to help with the consulting work to implement and design and implement these quality systems that really helped us with our international customers.
Excellent. Thank you, Bill. Appreciate it.
My pleasure.
So I've got just a couple slides here. Rich already covered his export working capital program with Ex-Im. I just put them side by side here. And the only reason is just to show you the highlights, really what the differences are. Again, we talked about the loan amount. Ours are up to 5 million. But the other two things would be with the SBA, there's no US content requirement. So the products that you sell don't necessarily have to be 51% US content. And then also defense and military exports are eligible. So if you fall into that category and your financing need is about less than 5 million, that would be a good fit for SBA's program. Okay, so this is my last financing situation, then we can open it up for Q&A. I'll just take a minute to go through this. So this is pretty typical of what I see. Here's a manufacturer, and Bill, this could fit into something that you may see down the road. Manufacturer, they secure a large order, $3 million order from a European buyer, and they're getting paid by a letter of credit. Perfect. But the exporter doesn't have the working capital to produce this $3 million order, so they need some working capital to do that. The payment terms are basically 30 days after shipment, but when you look at the combined time to build this thing and ship it, the total sales cycle is about 120 days. So now they're looking to finance that contract. So what we could do with our export working capital, we provide a $2 million line of credit. This is basically purchase order financing to finance the production of the equipment. We can loan up to 100% of the direct and indirect costs associated with the project or the purchase order, or 90% of the contract value. Since this is a manufacturer, we financed 100% of those direct and indirect costs. So the 2 million represents about 67% of the contract. The money goes out, but we call this a self-liquidating loan. So the money goes out, company uses it for its working capital. They build the equipment, they ship the goods, and once that payment comes back, typically it's captured into a control account where the money goes directly to repay that $2 million line, and then that $1 million then flows back to the company, to their operating account. So that's just a quick example of how our export working capital program works for a purchase order, kind of transaction specific structure. And with that, I'm going to skip this last receivable slide, and I'll just put our contact information up, and we can open it up for Q&A. Brian, I don't know if there's anything in the Q&A for us to